We are 40 points adrift, the magical 25,000 mark. Will it happen today? Will it happen tomorrow on expiry day? That's the key question, but the indices will come up on your screen. Look at that, 24967. In fact, now just 30 points adrift. So could turn out to be a very important afternoon. Mind you, banks are quiet. It was IT which was leading the way. It is not that the banks have gone up and come down as has happened in the previous 2 days, which is a good thing. Nifty Bank is quiet, but Nifty IT is the key thing. It was up about 0.6, 0.7%, now about 0.3%. So this one is not done too badly. Bring up the mid caps and the small caps very quickly just to show you what's happening at the broader end of the spectrum. 137 points, about 0.63% for the mid cap index. And the small cap index was trailing. It still is. Bring up the heat map now and show you what's moved. You know, some of the results that have come out. Greenply, for example, on your screen, up 9% after those numbers. But today, it's on the large caps, at least, it's not as much about the numbers on the gaining side, because HDFC Life or some of the life insurance companies are doing well because of the comments that have come in. A plea to the Prime Minister by a very eminent political voice around GST for life insurance. So that's probably got these stocks revving up. JSW Steel and some of the metals have done really well. Adani Port and Adani Enterprises, I think, taking cues from the successful closure of the Adani Green fundraise and some marquee names out there. So that's the other thing that to keep in mind. And the wind energy companies yet again. I mean, Suzlon is one, but today I think Inox Wind and Inox Wind Energy too have had a really good move. So Tamanna, lots happening in the markets today.
That the GST on insurance policies, health and life, be cut down. Remember, it's 18% right now in some categories and up as high as 28% in some. This is a plea which has come from, life insurance unions as well. And the fact that this letter has come out is possibly what's moving some of these insurers today. LIC by itself not doing too well, but look at your HDFC Life, SBI Life, ICICI Pru, we should pick up all of those doing very, very well. So that's one pocket. I just want to pull up what's happening with the broader markets as well before we go ahead, because, it has been quite an uptick since what we saw at opening. So broader markets have been steady, about nearly 1% up on the mid-cap index. The small cap completely sluggish this afternoon. Let's pull up the advanced decline ratio very quickly just to tell you what the market mood and the market breadth has been. A bit of narrowing in the last half an hour or so from where we opened. So you see that gap between advances and declines narrowing as well. A lot of the focus right now is on stocks specifically, a lot of them results driven. So we'll come to that as well. Let me see if I can quickly pull up the sectoral indices just for a second to show you what's been working. And not too many themes there. Media up there because of Z. The numbers have been good. Pharma working, so defensive play, consumption's doing okay. The biggest hit there on PSU banks, which have been flailing a fair bit. All right, let's look at positive result impacts first. Torrent Power. Torrent Power has to be a complete winner of the day in terms of how its numbers have been and how the street has also responded to those numbers. 16% up there. Z Entertainment has actually gone to 118 crore profit from a 54 crore loss year on year in this quarter. That's done very well. Granules, strong set of numbers. And, their formulations division has actually fired for them this time round. We had a great conversation with the Granules management, and you should listen into that on all our social media platforms if you wish. We'll play a part of it later in the show as well. On the losing side, I would say Titagarh, Fineorg are some of those which have seen a bit of pain because of earnings. Those stocks between 4 and 5% up. I don't know if you can quickly pull up Greenply as well. And Niraj mentioned it, but that stock has been firing because of the numbers. When we started the show a few minutes ago, it was 8% up. It's 13.5% up right now. Massively good set of numbers on Greenply. We'll get into the details of those. And the other one, which I think in a sense is also stock of the day, is BSE. Now, the day started off with concerns that the SEBI, the regulators' proposals on how to curb derivatives and volumes would really be a negative. But for the BSE stock, it has been a completely different story. 7.5% now and counting. The idea being that if all things are equal and if there really is only one weekly expiry from each exchange, the NSE and the BSE, then the kind of advantage that the NSE has in terms of more volumes will be evened out between the two. I mean, that's one simple way of putting it, but we'll get you a more detailed report. So these are some of the stocks that are really firing this afternoon. But overall, Niraj, I think you started the show by talking about how the market is adrift of 25,000. 25,000 still elusive this afternoon.
But 45 points. We live in hope. Let's ask Ruchit and Vijay Chopra if it'll happen in the next 53 minutes, or does it happen tomorrow? Ruchit, good having you. Thanks for joining in. How are you approaching trade this afternoon? You reckon 25,000 knocking today or tomorrow, or really doesn't matter to your trades?
Yeah, hi, very good afternoon, Niraj. Very good afternoon to everyone. Well, I think we have almost done that 25,000 mark, and 40-50 points does not matter much. No, I think it's just a psychological level which needs to be hit once. But if you look at the overall trend, post the election results have been quite strong. Post budget, we have seen a continuation of the trend, and still there are no signs of reversals. We have seen some pause in last 3 trading sessions, which may be to cool off the overbought setups on the lower time frame charts. And there's a global event which is lined up today evening. So maybe from tomorrow's trading sessions, we would see a continuation of the momentum which we had seen. So the important supports that we are watching for on the Nifty front, immediate for a short-term perspective. First is placed around 24,700 to 750 range, where the swing low is there, and below that positional supports are placed around 24,600. So till both these two supports are intact, I think the broader trend still continues to remain positive, and no one should continue to trade with a positive bias. And on the higher side, we are expecting the markets to continue this rally towards 25,300, which is the retracement level of the recent correction.
So 25,300 is where we could see the markets going right now. Richard, quick view of the Bank Nifty, if anything. I mean, they've really like sort of sacked this one out. The Bank Nifty as an index has sacked this one out for the last few sessions. Do you see an uptick there?
Well, here we would wait for some confirmation of a breakout, because if you look at the markets, the index Nifty is trading at its all-time high, but Bank Nifty is still far away from that high which it made at the start of July. So this clearly indicates a relative underperformance for the short term in the banking index. Although the longer term, mid to long term support levels have not yet been breached, but I think there are some other sectors which are driving the overall markets higher. So compared to broader markets, I think until we see a breakout or a closing above that 52,300, 52,200 again, I think that relative underperformance could continue in the banking space. So right now, I think there are many other sectors which are supporting the market. Better to continue to trade with a positive bias over there, and would wait for a breakout above 52,200 to create fresh longs in the banking space.
So definitely sitting out this one today as well. And I mean, can you really have a consolidated up move or a strong momentum up move without the banks participating is the question. Richard, very quickly, your picks.
So a couple of buy recommendations. First is a buy call in Asian Paints, breakout after a good amount of price-wise as well as time-wise correction. So I think that's where the momentum could continue going ahead. So at current levels also, although it's up by 2.5%, but still the risk-reward ratio is favorable. One can go long with stop below 29.80 for potential targets beyond 3,250. And Bharti Airtel is a second pick, where a gradual height of high bottom is there. Any minor corrections which are seen recently, we have not seen any volume-based corrections. The 20 DMA has been acting as a very, very good support, which is a sign of an uptrend. So one can go long there as well with stop below 1440 for potential targets around 1600.
Okay, so Bharti Airtel, definitely one of those picks there. Vijay, very good afternoon to you and great to have you on the show. Some of the flavor today, insurance and of course autos as well. Let me just start with your view on insurance, since those are some of the big movers this afternoon on the back of that letter that Union Minister Nitin Gadkari has written to Finance Minister Nirmala Sitharaman. I mean, the fact is that that decision is in the realm of the GST Council. So it's not something that the Finance Minister can do herself. But is it being seen as an indication of something really changing for insurance companies? And even if GST is reduced, does it really change profitability for insurance companies?
Well, per se, I think that it would be best. It would be better for the end user, for the end client. The cost would go down, and we are anyway battling with the prohibitive costs everywhere. Whether there are insurance costs, even if you insure your car, the insurance premiums have gone up, life insurance premiums, even health insurance premiums have gone up. So definitely the end user would benefit because this GST is anyway passed on to the government. So I don't think the companies would benefit from this, but the volume would increase. I think that it would bring more and more people in the ambit. So there are people who just postpone their plans to take a life insurance or maybe health insurance, or do not go for a larger cover just because the premiums are prohibitive. So I would say that overall for the industry, it would be good. It would include more and more people, and more people would go to take insurance and with larger covers. So I think that would be a benefit for all the insurance companies.
Okay. The other stock, and I would say group of stocks to look at today is those impacted by SEBI's proposals to curb derivative volumes. It was expected to be very negative for all, but look at BSE, and I just want to pull up look at that, 7.5% up, has been zooming since this morning. Quick take on this, Vijay, before I get to my colleague Rucha's report. On do you think that there is any clear benefit for BSE if these proposals do come to light?
Absolutely. I think that BSE did start its futures platform, but the volumes are not there. Clearly, the volumes are at NSE. And most of the trades which happen in BSE are cash trades. So definitely people would go towards BSE to cash trades. But I think that through your channel, I would like to recommend something. The charges which BSE charges the customers, it is a bit higher than NSE. So they should look into the same. And again, as I said earlier, in the case of insurance, that they should try and increase their ambit, their overall influence over the investors. Because even today, even if I put a trade, I would prefer to do it in NSE due to so many other reasons, due to liquidity and faster execution. And so NSE anyway is far bigger than BSE. But yes, this clearly indicates that this benefit would go towards BSE. They would increase their revenues. And although anyway, the people don't trade much on the BSE F&O platform.
Okay, so there would be an increase in revenues. In fact, BSE is our stock of the day, up over 7.5% on the back of the new proposed curbs. Actually, proposals. Rucha joins in to explain why this is being seen as beneficial to BSE. Yes, Rucha.
Thanks, Tamanna. So I'll start with how this positively affects BSE. Now, NSE has weekly expiry on four of the indices, namely Nifty, Bank Nifty, Fin Nifty and Nifty Midcap, while BSE has weekly option expiry only on two of the indices, namely BSE Sensex and BSE BankX. Now, SEBI has proposed a regulation which suggests that each of these exchanges will be able to provide the weekly options expiry only on one of the indices. So naturally, NSE and BSE will have to select any one index on which they will provide the weekly options expiry, and what we believe is BSE will choose that index and that particular date for the weekly option expiry, which NSE has not chosen. So naturally, traders will move from NSE to BSE to trade in that particular index in which BSE is providing the weekly options expiry. So this is what we have for NSE and BSE. But talking about the revenue which comes from the options, for NSE it is 60% of the total revenue which is coming from options, while BSE it is 40% of the revenue. So likely shift in volume from NSE to BSE will be favorable for BSE and negatively affect NSE.
Okay. So that's the reason why BSE is up. Well, the other win of the day, of course, is Torrent Power as well. M&M numbers are out. We will be going into those details. All of that, but after a very small break. After the break, we're also speaking with Nandik Malik. We're talking about the impact of SEBI's proposed measures. All that and more. Stay tuned. watching India market close at the 25,948 levels right now on the Nifty. Market breadth still not really positive and narrowing as we speak, but stock-specific stories are still ruling the roost. The other big theme today, of course, has been what the SEBI has proposed. They finally put out a proposal which was long awaited on what are the measures that could be taken to curb speculative activities in futures and options. So there are about 7 measures. There you have them on your screen. Now the question is, what is the kind of impact it would have on the market? And we've got Nandik Malik, or CIO of Avendus Capital Alternate Strategies, to come in and speak with us. Nandik, great to have you back on the show. And on, I would say, an interesting subject which the market has been waiting for, I think with bated breath, to see what happens. Do you think that this is slightly better than what was anticipated?
No, I think the markets had factored in that some kind of measures will be taken by SEBI. Because the volumes are really scary. So if you look at the volumes, daily volume in the F&O segment was somewhere around $2 trillion. Somewhere around 400, 500 times the stock market volume which you have in stocks. So I think what SEBI has done is very rational. And the increase in margins, the decrease in the number of strikes that you have, I think are welcome moves. See, what this will do is some volume will go away, but the main volume which will decrease is the volume which happens on expiry day. So SEBI in its circular has done a detailed research, and they are quoting facts and numbers. So what they are saying is a huge amount of volume happens in expiry days when people come and try and sell, let's say, options for 3 or 4 rupees. When, let's say, Nifty is at somewhere around 24,000, 25,000. And then they try and make some money out of it. So now this kind of a strategy doesn't really help people who want liquidity in the markets for hedging positions or, diversifying some of the risk away. So even if this volume goes away, there's ample volume in the system to meet liquidity management and, let's say, portfolio management needs. So I don't think this move will kind of put any restriction on fund managers or funds who want to actively hedge the portfolio. So all in all, I think it's a good move by SEBI.
How much do you see volumes being impacted, Nandik?
So volumes will go down for sure. So I'm not sure that margin increase. So they are saying the margin will be doubled first and then tripled over time. I don't think this will have a meaningful impact on the volumes. What I think will have a significant impact is there is one particular point in which they say, at least that's what my interpretation is that one particular exchange can have only one weekly option. So, for example, right now we have the main exchange in which on each and every day we have weekly expiry. So what I could decipher from reading the SEBI note is that now one exchange will be allowed to have only one index derivative which expires in a week. Because of which what will happen is, let's say, 3 or 4 daily expiries will go away. So that is where the volume drop will happen. But that is unlikely to happen in the main indices vis-a-vis, let's say, Nifty or Bank Nifty. So there will be some volume, but that will be primarily on account of volume drying up in the other indices. Now, good amount of that volume should also transfer to the main indices. So what should happen going forward is the volume in the main indices should go up. And because weekly index options in many of the other indices will not be available in the first place, they will become zero.
Okay, so you will see a transfer there. A lot of conversation about, and some are calling these as de-addiction measures by SEBI. A lot of conversation of what those who are, quote unquote, again, addicted to this kind of speculation, what they will do, where will that money go? Could it go into penny stocks? Could it go into commodities, derivatives trading? Does the grey market get a boost? Just wanted to know if you have thoughts on any of these.
No, so these options are available because you're right, that allocation can shift. But what is interesting to me is when someone, takes position, let's say, as of now, let's say a month back, or let's say for the last 1 year has been taking position in index derivatives, typically they would not be playing for 1 lot or 2 lots or 3 lots, right? The positions would be 4 or 5 lots. So if the lot size doubles, then previously they were taking, let's say, 2 lots. Now they have to take 1 lot. So I don't think that will, meaningfully impact that kind of a psyche. What will happen is sometimes people used to take those 3 or 4 rupees bets. So let's say Nifty is at 24,900 to 25,000. On the day of expiry, let's say at 310 or 315, and SEBI has mentioned this point in the paper also. If they see, let's say, 3 rupees premium for an option which they think would become zero over the next 20 minutes, then some positions would be taken and huge amount of positions would get taken. So that gets taken out. I am not very sure that money would get diverted towards penny stocks or let's say other kind of instruments because the options market works on the concept of margin money. So which means that if you want to take position worth 10 lakhs, the actual money which you have to give is say only around 2 lakhs or 1.5 lakhs as the case may be. Now, if you want to take position equivalent of let's say 10 lakhs in penny stocks, then you have to actually give the entire amount upfront. So, because of that, I think the kind of concerns which have of this money moving into other asset classes may not be as drastic. Some amount of movement can happen, but not as drastic.
What about movement in commodities trading, commodities derivatives trading?
Yes, some amount of money can move there. But, regulations can come in that market as well.
Yeah.
So
because the underlying concerns are the same.
Correct.
If there is, a lot of conversation now, Nandik, on whether these proposals is what we will eventually see, whether there will be tweaks here and there. What do you think? What do you think? Because I'm not sure where there's any opposition coming in from. Even exchanges will have to toe the line.
No, exchanges will have to toe the line. And today, for example, one exchange is up a lot. Because people are anticipating that the volume on that particular exchange will go up. So it's a regulatory thing. Exchanges, I don't think, have any say on this particular topic. I think it's a good proposal. It's a working paper at this stage, but I don't see where any objection can come from any market participant, from any credible market participant. So to me, it's black and white, and this is as good as go.
We just played a few minutes ago what Nitin Kamath tweeted on this, and among other things, he says that maybe having a product suitability framework is the answer, where you judge and you assess which product is suitable for which kind of an investor. Is that something that you agree with?
Yes, and that is something which SEBI has done in the last week. So, they have circulated a paper saying that something called a new asset class may be allowed going forward. It's again a working paper, and they have asked feedback from market participants, but that is something which SEBI has already done. So I think, everything seems to be very coordinated, and it's a very good thing to see that the regulators is keenly watching as to how things are shaping up in this field.
Good thing, Nandik. Just, want to put the other point of view in front of you, and what do you think? A lot of commentary today and a lot of concern that is it the regulator's job to tell retail investors what to do and what not to do, and assume that they can't use, their own mind?
See, I did my BTech in electrical engineering, and so in our labs, the professors were very strict. We used to go to machines, and we would think that doesn't make sense because we all are in the top college in the country, we know what to do. But then come to think of it, if something bad happens, then no one will go to the investors. Everyone will come and ask SEBI as to what checks and balances did you have in place. So I think SEBI is the decider as to what the rules would be. As market participants, we cannot challenge those rules. We have to adjust ourselves to the existing conditions and then take positions accordingly.
Okay, that's interesting. So SEBI has reminded Nandik Malik about his lab professors, where he realized in hindsight that what they were doing and when they were strict was for his own good. Thank you so much, Nandik. Always a pleasure chatting with you and right now, obviously, talking about SEBI's measures. Ruchit Jain and Vijay Chopra with us. Vijay, let's talk about some of the results which have come in today and focus on Mahindra & Mahindra, if you've tracked that. The huge discounts on their newest product seems to have hit them a little, though the response has been largely positive. How have you viewed the numbers? You're on mute, Vijay.
I think that I'm fairly happy with the numbers. They are more or less in line. And this quarter generally is a bleak quarter for most of the autos. The action will start from now on, post-monsoon, where we'll see tractor sales happening, the entry-level cars would sell. And yes, if there are market pressures and companies decide to bring down the prices, that's okay. That's good for the consumer. It is not possible that they just revise the prices upwards. So not a major dent. And I think that Mahindra happens to be one company which is going to keep on growing. It has a bouquet of products from EVs to SUVs to tractors, even some of the two-wheelers. So I think that M&M is a industry of its own, like Tata Motors. So I would say that the results are more or less in line, and I think that this stock can clearly head towards 3,000 and 3,100.
3,000, 3,100. Ruchit, your view on M&M on the charts?
So the broader trend still looks quite positive for the stock. Recently, we did see some correction from that 3,050 mark to around 2,750. But we have not seen any significant volume-based selling. And secondly, the 40-day exponential moving average, which is usually seen as a short-term support, has not been breached in this down move. So till the stock is above the support of 2,700, 2,660, I think the stock could see a slow and gradual continuation of a slow and gradual up move.
All right. And here's what M&M CEO Rajesh Jejurikar said at the press conference after the numbers were out. He says that a good monsoon has aided growth for farm segment and highlighted that demand for the XUV 700 remains intact.
July has been pretty good in most parts of the country, so most critical markets have been impacted positively, especially the west and south. The farm margins, and I'm focusing right now on the core tractor margins, just for clarity, core tractor margins are the margins we make out of our domestic tractor business plus exports from India. Doesn't include farm machines, doesn't include farm machinery, Powerall, and global subs. So that's gone up to a very healthy level of 19.7%, which is a 1% improvement in margin. You see the same on the farm standalone side. There was escalation and a shortage in chips availability, which had led to increased material costs, and 700 had a lot of chips. We've increased the capacity over since launch. So we started at 3,500. We hit 6,000 capacity. Now we're at 10,000. So there is a need and a desire to start leveraging our capacities. We expect this anniversary offer to have minimal impact on financials because we expect higher volumes. We expect the costs have already come down, and we will get operating leverage out of the higher volumes.
Right, that's the word coming in from M&M. Now, another stock which has seen significant gains today on the back of its numbers is Torrent Power. It's soared because of excellent Q1 numbers. Now, still up about 16%, has been a winner all through the day. Mika is joining in to tell us what's worked for Torrent Power.
Yes, so, just let me get through the, broader numbers for Torrent Power. Net profit was up 87% on a year-on-year basis at 996 crores. Revenue saw an over 20% uptick. Margins stood at 20.6% versus 16.1% the year ago. So that's a 400 basis point margin expansions. When we talk about the reasons for higher net profit growth, one was the increase in contribution from the merchant power sales in the gas-based power plants. And this, it's key to know that Q1 was a period where gas-based power plants were mandated by the government to be used at a higher utilization level with the ongoing Indian power demand. Also, there was higher contribution from the license distribution business as well as increase in tax expenses. When you talk about the project pipelines for the company, total contracted capacity of over 2,000 megawatts, total installed capacity of 3,200, and they expect the project cost of the pipelines to be, over 18,900 crores. And lastly, when you talk about assets, thermal assets, when you talk about gas and coal stands over 2,700 and 300 megawatts respectively. Solar capacity 1,300 megawatt power under development, and wind is also seeing 1,200 megawatt projects under development.
Okay, Torrent Power definitely been the winner today. Ruchit, any quick view on Torrent Power?
There's no doubt about the trend. It's not the 1 days of up move, but if you look at some historical data since last 1.5 years, the stock has consistently given very good returns. No signs of reversal as of now. Even if you look at the post that positive opening, we still have very good volumes even at current levels in the stock. So I think the trend might continue. If anyone is holding existing long positions, then they should continue to ride this trend.
Okay, so Torrent Power in focus. We'll take a very short break, but we're coming right back with everything that's happening on the F&O side of things and a lot more. Stay tuned.
Back with India market close right here on NDTV Profit. We are a bit more further away from 25,000 than we were at the start of the show. But be that as it may, still holding out in line with what the IT index is doing despite a very flat bank Nifty. Okay, some of these wind stocks have really shown up in trade. We've spoken about Suzlon being up for the last so many days. Today, the Inox Twins have moved out as well. 5% higher for Inox Wind, 4% for Inox Wind Energy. I was checking the exchanges, no apparent announcement that has come in out there. Vijay Chopra, I mean, do you track them? And yes, it's a great growth sector, but has the run-up been too swift for your comfort? Or do you still, I mean, if you were invested, will you stay invested? I think you're on mute, Vijay. No,
you know me since a number of years, and definitely I understand from where this question comes of comfort. So for sure, I'm not comfortable at these valuations, especially Inox Wind. Suzlon, I would, if you do an apple-to-apple comparison, I think that the promoters, and I've been saying this for quite some time, and Suzlon has doubled up from there, that the promoters make a difference. And the Tantis are no more there. And it is now with the Sun Pharma management. And it's a very stable management. They'll not do anything overnight. Whatever they'll do will be very, very calculated. So I think that Suzlon in a correction, I would be a buyer. And I would recommend it strongly. Inox, definitely I'm not comfortable with the valuations.
By the way, by the viewers on Suzlon as well, I think the Sun Pharma group has sold out quite a bit of their stake. So that's to be kept in mind too. But what a heady run it has had. And Vijay Chopra says he's not comfortable with the Inox valuation. So that's to be kept in mind. By the way, based on the merger ratio between Inox Wind and Inox Wind Energy. A sharp arbitrage exists between the two. So that's to be kept in mind as well. Ruchit, on the charts, would you book profits here? All these three names?
No signs of reversals as of now technically. In fact, the high top, high bottom structure still continues. So I would recommend to continue to hold existing long positions, but definitely won't advise to create fresh longs over here, especially in Suzlon, because the stop losses for fresh longs will be too far since the stock has already moved up. So maybe for fresh buying, one can take a buy on dip approach if we get any kind of corrective phases in the near term. But yes, existing long positions, I think until we get any trend reversal signs, no one should continue to ride this trend.
Well, watch out for those names and watch out for some others, because it's been an afternoon of some fairly interesting moves, some result reactions to Aegis Logistics and others. But the FNO space has been fairly active too. Agam Johnson with some perspective of what the penultimate day to the expiry looks like. Agam, how's it looking?
Well, it was the Bank Nifty, weekly options expiry as well as the futures expiry. And while it was a choppy day of trade, where we did still see that bank move within a very relatively narrow range through the course of the day. But I'll start off with the Nifty, about a 0.3% advance. Once again, continuing to move between 24,900 and 25,000. And once again, we have more increase in open interest also as far as Nifty is concerned. Tomorrow is a big day, I reckon, because tomorrow is the weekly options expiry for the Nifty. Maybe tomorrow it can be that day where we could see it move past 25,000. But that's a wait and watch. It's also a big guess and nothing more than that. But moving on, as far as the Bank Nifty is concerned, again, we're looking at rollovers around 69%. Substantial rollovers, but I reckon the last half an hour or so will see this number even higher. And it's the jury's out there whether or not this is towards long the short side. But for now, it's not had the best of series, even though it has advanced on a relative basis to the Nifty. There's been a bit of an underperformance as far as the Bank Nifty is concerned. Now, of course, when it comes to the Nifty, we were keeping an eye on 25,000. That's where we've seen a good amount of accumulation, but we're starting to see a little bit more build up around 25,200 as well. In the last 2 days, those are the calls which are also starting to see some activation. On the lower end, a lot more writing around puts, something to go by. We could potentially see a little bit more strength tomorrow. But moving on, let's also take a look at the Bank Nifty. And we're seeing an expiry around 51,500. Not much has changed there. And that's exactly where we saw traction, in terms of calls as well as puts. Finally, coming down to stocks, again, more gainers than losers. So longs for Granules, Divi's Laboratories and Dixon Technologies, shorts for Birlasoft and India Mart. Even among stocks which are seeing a decline in open interest, there is some amount of unwinding for Vodafone Idea, Syngene International, Deepak Nitrite and Balkrishna Industries. All of them advancing. The spots are advancing. So, we're categorizing them as short covering at the moment. All in all, a good day of trade. A relatively quiet Bank Nifty expiry as well. And, all eyes now on the Nifty 50 expiry tomorrow.
Mm-hmm. Okay. Yep. Thanks a lot for that. I don't know for how long will we get a chance, or forget getting a chance, but how long will we be able to say, oh, there's an expiry today, an expiry tomorrow, and an expiry yesterday, and an expiry 2 days back as well. So maybe those things will change. But let's wait and watch for that. Okay, continue our conversation with our experts, and some of the stocks that have corrected today post their numbers. Deepak Fertilizers, and I presume that despite the very strong margin and bottom line number, I think it must be the top line disappointment that must be leading to Deepak Fert correcting the way it has, because the numbers on the bottom line look very strong. Vijay Chopra, do you look at this fundamentally, Deepak Fertilizers?
It's a good company, but again, there would be reasons why any stock would correct. The stock had moved up magnificently, and I think that, in spite of the numbers the company has posted, I still don't think that it's expensive. At a PE of 26, being in the fertilizer sector and having a reasonably good monsoon overall, I don't think the results are bad. But yes, good stocks also correct. And if at all you find Deepak Fertilizers anywhere between 700, 750, I would be a buyer again in this company. But yes, it has moved up quite a bit. And I think that a correction would make the stock healthy and the entries healthy. So I would wait for, some decent correction to enter into it again. Good company, good fundamentals. Results are also good. But, markets always look in one way. If they want, everything to be hunky-dory, it doesn't happen. So there are quarters where, there would be some disappointment. But again, I would say that even a good results, the market punishes because, people just, the stock goes up in the expectation of a good results. And if those results even miss a bit, so correction starts. So I think that this correction, if at all it's a deep correction, I would be a buyer again in Deepak Fertilizer.
Okay. Well, keep in mind though, the numbers, like I said, the top line growth numbers left a bit to be desired. So some bit of profit booking has come in after this heady run. Okay, I think we need to cut across to the Mahindra AGM, M&M AGM. Anand Mahindra is speaking.
Each of these individuals has made sterling contributions to the deliberations of the board in the respective areas of expertise, for which the board owes them a deep debt of gratitude. We also welcome our incoming directors, Ms. Padmasree Warrior, Mr. Ranjan Pant, and Mr. Satpal Bhanu, who bring a wealth of experience from across industries. We greatly look forward to their participation on the board.
All right, so that was Anand Mahindra speaking at the 78th AGM. We'll listen in and get you any relevant bits of that conversation in a bit. But let's talk about another stock on our radar and an important development there for Adani Energy Solutions. The QIP of the company has been subscribed 5 times is what we're learning. Mihika is joining us with more details. Yes, Mihika.
Yes, that's right. Adani Energy Solutions is set to raise a primary fundraise of $1 billion via the QIP route. Now, the QIP is currently underway. It's subscribed 5 times with an approximate demand of 43,000 crores. Now, this QIP deal marks the largest one, first fundraise transaction seen in the Indian energy space as the first primary equity fundraise post-January 2023 when a follow-on public offer of the company was withdrawn. When you talk about where the QIP is likely to close at, well, it's likely to close at rupees 1,135 per share, which is 16% higher than the issue price of 976 rupees per share. When we talk about who's participating, existing long-only investors like GQG, QIA, ADIA, and few other US investors have participated. And from the mutual fund side of things, our domestic demand stands at $350 million. When you talk about domestic institutions, including SBI Mutual Fund, SBI General, Bandhan Mutual Fund, HDFC Mutual Fund, 361 MAM, and Axis Mutual Fund have also participated, with SBI Mutual Fund submitting bids of 800 crores. And it is key to know that the mutual fund is, with the mutual funds actively investing, it also helps expand the investor base for Adani Energy Solutions, which is a company where 74.94% of shareholding is held by promoter and promoter groups, while 25.06% is held by the public.
Okay, so Adani Energy there with a successful QIP which has wrapped up. Standard disclosures and disclaimers here. You're watching NDTV, which is part of the Adani Group. Now, another stock which has really been on a tear today is Granules India, and in large part because of very, very good numbers that they have seen. Look at the Granules stock right now, even now 7% up. Now, earlier in the day, we spoke to the founder and chairman, Krishna Prasad Chigurupati, and here's what he had to say on his growth outlook for the company's formulations and the paracetamol business. Listen in.
Formulation business, as per plan, will continue to grow as we go forward, and ultimately we may end up at around 80% or 82%. Coming back to the API and paracetamol, this year, actually from last fourth quarter of last year, paracetamol situation has been very bad. All our customers abroad have overstocked, and they have inventories for to last them another 6 to 8 months. And also in the last 1 year, a lot of new capacity had come up in paracetamol, anticipating a huge demand, and a surplus capacity and no demand. So it's very bad, and I think it's going to take at least 2 to 3 quarters for paracetamol to rebound. So meanwhile, the formulation business and other APIs, actually, or other formulations, the core products used to be about 90% few years ago. Today, they've gone down to 65%, and other products have come to 35%, which is a good growth in our basket. And this is what is helping us in keeping up our revenues in spite of a debacle on paracetamol.
Interesting story of Granules coming through, and among other things that he told us is, of course, they're focusing on oncology products that will be out by about FY26, and they're looking at segments like ADHD drugs. So that's definitely a new area for them that they are going to be looking at. Vijay Chopra, just the pharma space in general and Granules in particular, if you track?
The stock has moved up. The stock has moved up quite a bit, and I would say that if somebody has positions in the stock, I think exiting is a good idea. And there are lots and lots of companies where you can invest. I have few stocks, if at all you allow me to speak. Entire pharma space, I think that overall we have seen a decent run up in the big wigs. The likes of Sun Pharma, Cipla, Lupin. So I am expecting some kind of a correction. Although the sector overall looks very good to me, but I think that all these stocks have moved up quite a bit. So a bit of a correction would make these stocks healthy. There are other opportunities in the market where you can shift your money to.
We were talking about this in the morning that pharma may have had a dull day yesterday, but the commentary from some of the pharma stocks, some of the chemical stocks is very, very strong, particularly the CDMO players, and therefore that is something that you might want to keep at the back of your mind when you're looking to trade these names. Okay, what else? Today, bad numbers have led to a Birlasoft and some of the others come off, but there is some serious strength in media today. So, Z Entertainment on the back of the numbers has gained a little bit. There is strength in Network 18, yet another day of 8% up move there. Last week on the budget week, PVR had some very strong moves as well. So, there's a clutch of these media assets which are doing very well. Today, PVR may be down, but last week, the budget week, PVR had a good move as well. Ruchit, it doesn't often come up as a trading ploy, media, because these stocks really give up the gains as quickly as they log them. But is there a trade in any of the media names?
So I think yes, we hardly see any movement which lasts for a longer period of time within the media space. But if I just do some comparative analysis of the recent movement, then Sun TV is one stock which has shown very good strength in last 1.5 months, and still there are no signs of any kind of trend reversals. The potential targets for Sun TV in the near term are seen around 1,025 kind of range. So I think if one has to take any exposure from a trading perspective, then better to stay with the outperformer. So Sun TV might see a continuation of the trend towards 1,000 to 1,025.
Okay. Adani Power numbers are out on your screen. Revenues are up 35.9%. Numbers are looking good on the face of it. EBITDA has seen a big jump up actually from 3,514 crores to 6,194 crores. Margins have seen over a 10%, nearly a 10% gain. So strong numbers there coming in on Adani Power after that initial spike. The stock now seeing a bit of profit booking. We'll get you more details on those numbers. EBITDA, they're up 76% as well. All right, some of the other stocks that have been moving in trade today, and I just want to talk, since we talked about M&M already, I just want to talk a bit about Maruti. Now, those are the other numbers that I expected shortly. And Vijay, when you look at a Maruti compared to an M&M, and we're waiting, of course, for those numbers to come in. We'll go to the sales previews also in a bit. What are you expecting?
Well, I think that Maruti should also do fairly okay because, as I said earlier, that this quarter is tepid for most of the auto companies. The expectations are for the next quarter where they're going to launch new models, where, we are going to see a resultant of a good monsoon, where people buy new cars. There's a festive season going on. So I think that, Maruti results should be in line. And I think that, this stock would slowly keep on growing and, maybe we see, even 15,000 levels coming on Maruti. So Maruti versus M&M. M&M has a bigger portfolio of products as compared to Maruti. But again, apple to apple comparison, I think that Tata Motors would be a better comparison with M&M. And I think that Tata Motors, for that matter, my long-term target is 2,000 for Tata Motors. So it will keep on growing because it has, lots and lots of products in the pipeline, from trucks to cars to international markets and whatnot. So Maruti also, I'm expecting a decent result. And I think that it would keep on going up. The stocks chart also looks fairly okay. And I think that it can go up to 13,400, 13,500.
Okay, 13,400, 13,500, possibly on a Maruti. Quick view from you, Ruchit, on Maruti and Tata Motors, since Vijay also talked about it.
So the longer term trend certainly remains positive for both the stocks. Maruti, in fact, has seen a good time-wise correction or consolidation in last 3 months. You look at mid of April, the stock prices were trading around this 12,900 mark. And even now at the end of July, it's around the same level. So some time-wise correction has been seen. But in this entire corrective phase, the stock has not breached its support. So which clearly indicates that as the stock witnesses any kind of declines, good buying interest is seen over there. And if we see a continuation of the breakout from this consolidation post the numbers, then I think the stock has potential to rally towards 13,600 to 13,800 kind of range. Tata Motors has already witnessed a continuation of the uptrend recently where it gave such a consolidation breakout. So I think both the stocks technically looks quite positive from a short to medium term perspective.
You know, we're talking about auto. Let's take a look at what the expectations are for the July auto sales numbers. You will see those numbers out tomorrow. Analysts are optimistic about two-wheeler sales picking up. Let's get Puneet in. Puneet, what's expected from July?
Well, definitely, I think two-wheelers as well as, a couple of players in each segment is going to be the flavor of the month for this particular auto sales month of July. Bajaj Auto as well as TVS Motors have performed well, roughly 8 to 9% growth compared on a year-on-year basis for the companies. It's going to be a difficult month for Eicher Motors, continuing its trend of, FY25 not being a very good start at all for this particular brand. Hero MotoCorp will have roughly 7% growth, but that compared to June, which was a very good month for Hero, which was a very big surprise as well, is going to see a 16% month-on-month correction, but on a year-on-year basis, they're expecting good 7% growth. For passenger vehicle space, it's going to be driven by volumes by Mahindra and Mahindra, roughly high single digit of 8 to 9% expected for M&M cars. Maruti Suzuki as well as Tata Motors are going to be see flattish trend. For commercial vehicles specifically,
Puneet,
we are seeing...
Puneet,
yes,
I believe Maruti is out, so you might want to analyze those numbers for a moment, so I'll leave you with that. But come back in a moment from now to tell us what those numbers look like. We are 6 minutes away from market close, but Maruti earnings on your screen. Let's leave Puneet for a couple of minutes while he analyzes these numbers. But the net profit number, and get the Maruti stock on the screen as well, 3649 crores versus the estimate of 3272 crores. So the net profit number, Maruti, is well and truly above estimates. On the revenue front, 35531 versus 34830. So the beat on the bottom line is much more than the beat on the top line. Does this mean that there is an operational beat as well? I think that is something you ought to watch out for. But after the kind of quarters that some of the other auto names have had, we needed Maruti to come up and deliver yet again. I mean, in line with what some of the others have done too. And on the face of it, Tamanna, on the bottom line front, boy, has it delivered.
Well, Maruti definitely seems to have, beaten expectations, at least on both top line and bottom line. This quarter was something which was also being closely watched because it's not necessarily the best quarter for the industry. And that's something we heard from M&M as well. It will be interesting to see what Maruti is saying and when we hear from them on policy push towards hybrid, etc., and how much of that is going through. But the market leader in that sense has continued definitely to perform about 1.5% up. We'll wait for Puneet to get more details on the internals of those numbers. Meanwhile, I came to you just a few minutes ago, Vijay, on the auto pack, including Maruti. On that first cut, anything that you want to add? I mean, definitely on the profit side, you have a fairly good bump up, and I can see the stock moving up as well.
Well, yes, I think that the results are very much in line as I was saying. And this quarter, so to say, is tepid because nobody goes and buys new cars in monsoon. So there are certain religious connotations to it as well. But again, the next quarter, I think, should be very good. And I think that, I gave a target of 13,300, 13,400. It would be met very soon. So I'm happy with Maruti. Maruti would go on, and I think that, the stock would be maybe 15,000, 20,000, and who knows what, because they are able to still maintain the lead. I still remember one of the interviews of Mr. R.C. Bhargav where he said that they don't want to get into EVs because the focus was very clear. They got into hybrid cars. So Maruti per se, they understand the Indian markets much better than any other car manufacturer in the country. So hats off to the management. And I think that it's a result which is very much in line with my expectations.
Most certainly. Okay, Puneet, very quickly, what do you make of the numbers?
I think numbers definitely a big positive. Revenue beat definitely on a standalone basis. Margins have also come in above estimates of roughly 11.6%. So a beat of roughly 110 basis points on the margins per se. Just on the profitability, it was expected to be around 3,200 odd crores. It's come in at roughly 3,600 odd crores. So that's a key positive as well. The volume picture was already out there. They had a 5% growth, but definitely just on these 4 headline numbers, it's a beat on all fronts for Maruti Suzuki on this particular metrics that we can look at. Back to you.
Yeah, the EBITDA is up 51% year on year.
This is a serious move. Puneet, stay on actually.
Yeah.
But Tamanna, this is a serious uptick on the EBITDA.
Serious uptick on the EBITDA. I mean, even the profit number year on year is looking very strong. Look at the margin figure also is looking very, very robust. I mean, Maruti is the giant of the industry, right?
Yeah, and for it to do that, this is serious stuff. So, you know, and while we get other analysts, but Puneet, what could have led to this kind of a beat? Is it better volumes? Is it raw materials? What could have led to this performance on the operational front?
Combination of things that worked for them. One is, of course, the launch of the Swift that we saw in the month of May, and secondly, we have seen raw material prices very on a benign basis in this particular quarter compared to the same time last year. Last year, the margins were around the 9.9 to 10% range. That was because of higher commodity costs. So higher commodity costs as well as lower raw material prices in this particular quarter has helped. Apart from that, if we just join that with the launches, so Swift is already doing 15,000 vehicles per month, and that was a much needed push for Maruti because we also Mahindra's 3XO as well as other segments that they had multiple launches in that segment. So the 3XO plus another thing that they did was launch the Dream series, which was to reinvigorate the entry level cars as well. So get that demand for likes of Celerio as well as Alto as well.
You have a 48% bump up on the profit year on year. You're talking about the Dream series. This is a dream set of numbers. I think we have 30 seconds left. But Ruchit, a trading call on Maruti, which I think will have to be taken up tomorrow by whoever's hearing this. But what would be your call?
It's a clear breakout from a consolidation phase, which indicates a continuation of the uptrend. I think 13,600 is where the retracement levels point out, which could be seen maybe tomorrow's trading session only.
Wow. This is a 4% up move. Ruchit, you'll buy it at the current levels, will you? 13,360.
Yes, it's a buy even at current levels because the stock has already gone through a corrective phase. Since April till now, since last 3 months, the stock has not seen any kind of price uptrend. And since it is a good breakout post that consolidation, I think even at current levels, it's a good buy.
Okay.
Vinay Bolinchkar is joining in, and even as markets have shut. But the big story at this moment is definitely Maruti. Vineet, hi, if you can hear me. On the face of it, outstanding numbers for Maruti this quarter.
So, it is more along expected lines for us because, your Q1 last year was very single-digit EBITDA margins. And the kind of, growth that we have seen in the CNG engines and the thrust, more into SUVs as a percentage of the portfolio has resulted in a very, very good growth in the EBITDA margins. And that is what is causing the outlier performance. We think that margins can sustain at about 12.8 to 13% for FY25 and can get even better than that. And keeping that in line, we expect we are projecting around 13,860 crores of PAT for the coming year. Profit of 14,165 crores. And, that's a very healthy EPS number of almost 450 rupees in the coming year.
Mm-hmm. Okay. Vineet, we've seen a couple of names come out. Tata Motors comes out tomorrow, and that stock ahead of the numbers has seen a big rev up as well. What would be the pecking order with the expectations that you have from Maruti? What would be the pecking order on the four-wheeler side?
So we are very, very constructive on Maruti. I think the stock has moved barely 30% over the last 1 year since we initiated on the stock. And we think that one breakout couple of years of performance is still underlying, given the fact that, Maruti is now also going to be focusing largely on exports. So we will see revenue and volume numbers come in not only from a, high value SUV portfolio, but also from very good export numbers. So overall, we think that these combined with the benign cost structure should enable the company to grow handsomely over the next 2 to 3 years.
Okay, Vineet, we'll hopefully have a more detailed chat with you tomorrow morning on India Market Open. We'll talk in detail about Maruti, maybe look out for Tata Motors as well. And we'll also have a chance to see the internals of the numbers, wait and hear what the management's saying. But Vineet Bolinshkar there. Meanwhile, let's wrap up the show, wrap up the markets. We're closing actually on a good note. Let me pull up the Nifty for you and just give you a sense of where we have closed. You're about, 22 points away now? Or some distance to go? Some distance to go still? Okay, while you've closed, you've actually corrected down a little. So still about 50 odd points, 49 points away from the 25,000 mark. Will tomorrow be the day is the question. But among the winners, we'll just pull up the heat map before we shut shop for this afternoon. And definitely Maruti with that stellar jump up. JSW Steel, Asian Paint, some of those winners there. HDFC Life, SBI Life. Also, they're on the winning side with this hope that maybe some rationalization on GST. Your consumption pack looking a little weak, not just Tata Consumers, but Britannia as well, and RIL also feeling the heat. On the broader indices, and let's just pull up what mid-cap and small-cap indices are doing before we wrap for the day and what that picture has looked like. Because, you've really seen this last-minute boost in the Nifty because of just a few stocks. The Nifty Mid-Cap 150 up about 0.5%. The small cap closing in the red actually. Some profit booking going there. The whole theme most of this week has been results. So rewarded if they're good numbers, really punished if they're bad numbers. And if you have good numbers, you've already run up, you still could get punished. I think that's really what the mood of the street has been. But with that, we'll wrap this edition of India Market Close. From Niraj, me and the entire team that put it together. Thank you so much for watching, and we'll see you back tomorrow.
The MSMEs and so on, and the visionary leadership which has a futuristic vision, because from the front the Prime Minister leads the economy, we are able to achieve this goal. So I also presented the budget for the Union Territory of Jammu and Kashmir. I just want to highlight a few important features before I move on to responding to honourable members' issues which they addressed on the budget. So I'm happy to inform that the concrete steps that have been taken by the Union Territory administration to free itself from the legacy fiscal distress related issues which they had inherited from the erstwhile state. And this has borne good results. With substantial financial support given by the Government of India, 17,000 crores have been provided as support in the Union Budget of UT this year. The fiscal deficit to GSDP ratio of the Union Territory of J&K is estimated at 3% for the financial year 24-25. There is clearly a sign that public finances of UT of Jammu and Kashmir is now back on the rails. The government has worked very hard, unhindered, towards fulfilling the development aspirations of the people of Jammu and Kashmir with great sense of fiscal responsibility. Because I'm dealing with Jammu Kashmir budget now and later I go to the general budget, there are issues which have been raised about J&K budget which has been tabled in this house, both inside and outside of this august house. Now, I take this opportunity with your permission, sir, to address issues which have been raised in this house and equally because of importance given of those issues which have been raised outside as well. So the first issue is borrowings have risen from 12,000 crores to 24,000 crores in the last 2 years, and it is unprecedented and it shows fiscal mismanagement. This is an allegation. I like to respond, sir. Unlike other states and union territories, J&K has been plagued with pressures from externally sponsored terrorism. This is not a secret, all of us know it. In addition, historical legacy of poor governance, and I reiterate this point, sir, historical legacy of poor governance and low revenue base had created a situation of near perpetual distress and dependence on the union government. Just no way in which the state could have run without the union helping them, and that is how the main feature of J&K's state's budget was and also the economy was. Given this kind of a legacy inheritance that we've got, as part of the efforts to correct lingering fiscal distortions and for enabling transparent disclosure of the fiscal situation, the Union Territory Administration has brought off-budget borrowings onto its books. This has been done within the borrowing ceiling allowed to the Union Territory in each of the years which have gone by. So this is something which I have to state with conviction, that the UT was permitted to undertake additional borrowings against unutilized borrowing space from the previous years to take off-budget borrowings on the budget and finance its expenditure commitments. So the questions also, or the allegations also were that fiscal deficit was pegged at 1.6% and it has turned to 5.36 in FY24, more than 3 times the original estimate. And also that the capex has been slashed by 10%. The question therefore was, will the central government take blame for fiscal profligacy at the state level? I'd like to dispel any confusion in the minds of people. Along with the special support of 17,000 crore which has been announced in this budget from the union government, several other things are happening along with the efforts in recent past would reduce the fiscal deficit, and I hope it will reduce the fiscal deficit to 3.3% actually in 24-25. So it's not just the 17,000 crores that has been given as a special support, but also because of the efforts which are being put in the last few years, I think fiscal deficit will be back at 3%. While tax revenues, sir, have seen impressive growth, efforts on metering has improved billing and collection efficiency in the power sector, and that has also resulted in non-tax revenues increasing from 5,148 crores in 22-23 to 6,500 crores in 23-24. It's a big reform step that has been taken, well received by the people, and as a result of which we are able to have collection efficiency in the power sector. And I appreciate the J&K administration for having taken this effort, which is showing results for its own benefit. The Union Territory has also very important points, and this is a point which I submit to your consideration and for the August House to recognize, that the Union Territory has discontinued the earlier practices of running hundis and overdrafts from J&K Bank for its day-to-day cash management. This was a feature, sir. Every year, this would literally be a burden on J&K Bank and equally a lazy comfort for the administration that they could do this operation with the J&K Bank and get away with being transparent in the way in which they handled their accounts. I'm glad that this practice has been discontinued. During the last 4 years, the J&K Bank has made a remarkable turnaround from a loss-making bank of 1,139 crores of rupees in 2019-20. The bank has now made a profit of 1,700 crores in the year 23-24. So that is the kind of turnaround and that's the kind of efficiency with which the bank is now performing, being run professionally since after 2019. Capital expenditure for the Union Territory, sir, has also increased from 10,634 crore rupees 22-23 to 12,101 crore in 23-24. So recording a 13.8% growth. So J&K, Union Territory and their situation is in a healthy fiscal situation, being able to meet the development aspirations of the state. One other point of criticism, if I may say so, has been that the state's tax to GDP ratio increased from 5 to 8% in 3 years. Does this mean the people of J&K are subject to heavy taxation without any corresponding increase in their welfare? This is one of the questions asked. I like to highlight, sir, that the J&K situation, J&K's higher tax to GDP ratio is due to better compliance and effective monitoring of the taxation system. I'd like to mention that with the introduction of GST, tax rate across the country is the same on all GST products. The rate of taxation on non-GST items are either at par with other states or only lower and not higher in J&K. Revenues from GST, motor spirit tax, excise, stamp duties were 9,467 crores in 2019-20. It has increased to 13,903 crores in the year 23-24. So the administration is showing efficiency in collecting from non-GST tax also. And as a result, the fiscal health of the state is also improving. So the UT has also given care to expand the dealer registrations, improve GST return compliances, initiated a lot of e-stamp